Welcome back, Alpha Hunters. The markets are closed for the week of November the 15th. That's right, we're about halfway through November and we're almost to the end of the year. What a week we had, and man, we definitely have some things to talk about. We got some pretty good price action throughout the week. Obviously, you can see we're right here that we definitely ended on the lows, but we had a nice little gap up. Remember, we kind of just bounced around from the uplifting and positivity and the bullishness from the end of last week, right after the U.S. elections, presidential elections. The market went on a run. It typically does. It's very normal. So we had a little bit of that continuation to start off on Monday, and had a nice little pullback middle part of the day. Tried to base and bounce as we go into Tuesday, and we didn't really continue any higher than that. Nice little pull down middle part of the day into the middle part of the day there on Tuesday, and a very strong bounce there Tuesday afternoon or going into Tuesday afternoon. A little bit of pullback into the close, but this was the kind of the low that we were talking about earlier in the week on a live stream. Is this was going to be a very important low, because it felt like, all right, so we had some really strong bullishness, obviously from the U.S. elections coming into the week. And so we're just kind of looking for a pullback. And this is like the first little decent one. Then we got a rip here on Tuesday, second half of the day. So that's what you're kind of looking for. Like, okay, where are we going to kind of base out here? And it's like, all right, where are we going to get that line in the sand kind of moment? And that was basically it. Wednesday we had continued a little bit more of the pullback that we had a little bit towards the Tuesday's close. And then we just kind of went bullish into the second half of the day on Wednesday, and then pulled back a little bit. You were kind of thinking maybe we'll squeak out and go higher. I kind of thought we were, and then Thursday definitely was not that case. We pulled down, and we tried to base and go higher, and we just kept breaking down. Really, it was what happened. I mean, we just kept breaking down. Middle part of the day was this move right here. This was let you know that something was about to happen. I mean, we just kind of came down and took out all these lows from the previous 2 days. And then we just kind of went sideways right there at the low of Tuesday, right? Low of Tuesday. And we just chopped sideways here for much of the second half of the day. And then we just broke down going to that last hour. Just kind of ended towards the lows on Thursday. It did not set up well going into Friday. Boop, big drop on the open, about a 0.6% gap down here on the open Friday, and we just traded lower all the way into the second half of the day. And yeah, it was kind of a brutal day there on Friday. Last hour and a half ended off the session lows, but not a lot of strength. Okay, and real quick, I just wanted to give you a quick glimpse of where we were last Monday's close to basically through this week. You can see we had a nice little rally there Tuesday as we go into election day. Wednesday higher. So all we've really done as far as perspective here is just kind of come down to breaching the open kind of movement that we had from last Wednesday. So that's about it. All right, so let's see how that sector rotation kind of went for the week. Now, one thing you need to kind of remember is, post-election, you do get a lot of that. This stuff's going to work really good in this administration. This stuff's not going to work good in this administration. And yeah, we got a lot of that last Wednesday. We got some stuff that really wasn't working, and we got some major breakdowns this week. Financials and energies held up pretty well for the week. You can see they did pretty well. Definitely outperformed the most. Utilities outperformed pretty good. Discretionaries, staples, communications all outperformed on the week. Real estate was in line with the market. Definitely was lagging early on in the week, but wound up coming back a little bit there on Friday. Industrials is also in line with the market, kind of sneaky hidden in there. But yeah, Friday kind of just very much performed with the market. Materials and tech underperforming there on the week, and healthcare, big time underperformance. We had some pretty major breakdowns in some pharmaceutical names on Friday. Now, if you remember back to last week on Wednesday, the day after the election, we saw healthcare, mostly pharmaceutical stocks, really underperform. They were not doing good at all. And we had some continuation breakdowns this week, especially there on Friday, with the new administration kind of appointing to someone that kind of is very much a skeptic of pharmaceutical industries and vaccines and stuff like that. All right, the VIX, VIX. Well, we continue lower this week from the end of last week, and we tried to break and hold below the low that we put in back in August. Now, we did break below it Wednesday and actually held below it Thursday, but you can see obviously the strong bounce back that we got on Friday on the VIX. So obviously some people will say, oh yeah, the VIX just had a false breakdown, taking out some previous monthly lows and stuff like that. And, you know, I mean, it can be. It's just one thing that kind of stinks when you get a lot of emotion and snappiness in the markets. It's like, you know, which way is it really kind of going and that kind of stuff. So a lot of people are changing things right now, changing positions on a lot of things. So it's really kind of tough to tell, but it is one that we'll continue to watch, obviously, and monitor. DXY dollar index, entire week, absolute monster, you know, just up every day. Kind of thought there on Thursday it was going to have a pretty large upper wick, but it had a late day rally and actually closed at yearly highs on Thursday. So nice little lower wick coming in there on Friday. Maybe a rest. We're basically at the highs roughly of last year from basically about a year ago. So yeah, we'll see what happens here with the DXY dollar. But guys, I want to see a rest before I feel comfortable taking it higher. See what kind of sets up. It's been pretty aggressive here recently. All right, taking a look at Gold Trust GLD here. Yeah, I mean, we broke down pretty good this week. I mean, we just saw the dollar. Dollar was up pretty substantially on the week. So the gold had a pretty good breakdown throughout the week. And I think now you're probably just looking for some really, really good spots to say, you know what, I'll dig buying in there. Obviously, we're getting close to that 100 moving average. You know, that's probably going to be a pretty good interaction there to be getting in. Last time we did that in February, we went on a pretty good run. So not saying we're going to bounce cleanly, kiss right off that 100 like we did back in February and go higher, but I think that might be a pretty good spot. The other spot that I really kind of am very much interested in is these double top highs that we put in back in April and May. Those two areas, the 225 or so area, looks pretty good. If we get back down to that area, especially depending on maybe how long this possibly takes. Like we chop around here for about a month, and then when we wind up breaking down, I don't know, maybe late December, January, something like that, and maybe the 200s also getting into that area and interacting into there, that could look really good. So picking up some here, picking up some maybe down there, look pretty good in my opinion. But I think for now, gold probably going to set up a better resting and pullback time period. All right, taking a look at 10-year yields. Well, nice move higher there to start the week. And we kind of just chopped around there Wednesday, Thursday, Friday. So not saying we're not going to continue higher, but it is having a hard time continuing higher. Anyways, I mean, honestly, it doesn't seem like anything is telling me like yields are going to roll over right now. I mean, if we go sideways a little bit longer and then we start to roll down, then maybe that would be the case, which then you're going to want to be bullish on bonds. But for now, yields seem like they're still going to just stay intact. 10 and 2 inversion, still just choppy at or around that 0 line. Take a little quick look at the 10 and 1. The 10 and 1 still, yeah, choppy around that 0 line. So probably going to be moving above going forward. It might just be somewhat choppy around the 0 line for now. All right, HYG. Yeah, nice move last week. This week it came back. So it's kind of a tough one. I was kind of thinking maybe you want to play it off the 10 on the breakout, you know, on this consolidation on the 10 EMA. And then we had the breakdown Thursday. And, you know, you could definitely say it's a little bit of a lower wick on a retest. Maybe I want to take that higher. It's possible. I can understand it. I don't want to play it. Yields seem like they're just being very strong right now, and I don't think that's something I would want to fight in the bond price area. And speaking of things I don't want to fight, man, these downtrends on the LQD and TLT. Now, what I just kind of mentioned about the HYG not being bullish, that is not really That does not apply if you're playing these like one's hedging the other. Like if you're bullish on the HYG, but you're also playing it as like you're bearish on the LQD or TLT, I think that's probably going to be. I think you're going to be fine, and that would be the way I would play this. Still, I think that would be the best way to go about it. Obviously, we have clear breakdowns across the LQD, basically ending, not at the weekly lows. Obviously, we got a pretty good bounce here on Friday, but we broke last couple of weeks of lows on Friday. So definitely says we're still trending down. Even here on the TLT, we broke last week's low there on the TLT as well. So yeah, I think, in my opinion, I would rather be bearish on the TLT LQD and probably just bullish on the HYG. I don't really see a need to change that philosophy going forward. Okay, taking a look here at the RSP. Now, one of the things that really kind of caught me off guard was how much the market was bullish. Yeah, I mean, I didn't change the thumbnail last week, and I'm not doing it again this week. And a big reason why for that is even with a changing of political election results from last week, typically we do get that post-election run that we got last week, but this week was I wanted to see what was going to happen this week. The beginning of the week was a little bit more organized. I thought we would kind of hang in there, maybe push a little bit higher as we kind of went to the end of this November, and then maybe we rolled down later. But the thing that I'll say is when you have a lot of people that are going into office where they are talking about cutting government efficiencies or looking at government payrolls, not payrolls exactly, but government spending. I don't really know how cutting government spending is going to be really good for the market exactly. So that's where I was a little hesitant about last week. I was like, you know what? Just give it a second. Okay, just give it a second. Let it breathe. Let it digest what's going on. And we saw some pretty good bearish indicators last week from certain sectors. So the RSP pulling back pretty good. Not shocked by it. Same thing here with the DIA. The DIA pulling back a pretty good amount. It still hasn't interacted with its previous all-time high before the election back here in kind of mid-October. So a little bit of room to kind of come down there. Obviously, you're going to get people to kind of buy the dip, but we did put in one huge gap here. So if we come all the way back down and try to fill this gap in November, that's going to be breaking some major EMAs and moving averages that could really put in some issues. Here's a look at the IWM. The IWM is going to be different. My opinion here is probably be a little bit more bullish in this ETF, this market ETF. It's a little bit more of the small, medium-sized businesses, right? But you're going to have a pretty good support level. And what did we see last week on Wednesday? Well, we saw this thing was up almost 6%. It was up at 6% at one point in time. So yeah, we were definitely seeing some really strong rotations in there. Will it be choppy? Yeah, sure. I'll almost guarantee it, right? It's if we're seeing some market bearishness in other areas, I mean, this thing probably will set off a little bit too. But this is where I'd rather be bullish, and I don't really know how much want to be super aggressively bullish in like the Qs, which is traditionally where people have been really aggressive. Obviously, big tech is still building out AI. They're still spending a lot of money there, not really seeing the payoff. They are seeing some benefits to their businesses, but some of those companies that are benefiting in it from the AI build out has more to do with business efficiencies than anything else. The other thing I kind of noticed here on the Qs is we had a really wicked island reversal here on the Qs. Basically from, what was this, last Thursday to this Thursday. Then we had that gap down Friday. So we have a perfect island reversal. And I just say that doesn't look good. We have a huge gap down. We didn't even feel the gap all the way down to Wednesday. So I was like, maybe you're going to get a bounce off of that. And it's possible. But that huge island reversal, barely hitting all-time highs, is not exactly one that looks like a real confidence booster. Especially when you've had the Qs, which typically leads the markets higher, really only outgained the S&P 500 one time in the past week and a half, and that was last Thursday. And that was about it. Everything else, even if it did outperform on a day, it was very marginal if it did any other day than than that Thursday. Thursday was the only day last week, not this past Thursday, the previous Thursday, the Thursday after the election results. That was a big deal. So you do have that island reversal also here on the SPY. It's definitely a lot more obvious on the Qs, but there's still gaps here from last Thursday, Friday, and then obviously this week or last Wednesday, Thursday, pardon me, and then this Thursday, Friday gap down. So yeah, we got some pretty good volume to come in. Definitely did not get the best of news for government agency appointees for certain sectors. You know, some of these businesses didn't sound like it was good news for them, and they were kind of telling you that last week, right? We saw some of those sectors were not performing well, and they got hit pretty good this week. So really, I don't want to say, you know, you want to be bearish, and that's why I haven't changed the thumbnail to bearish. If we go bearish, we're going to be breaking down some really big moving averages, so to where we get into some of these really big air pockets in here, you know, especially, you know, between the 50 and the 100 on a daily time frame and 100 to 200 on a weekly. But when you get into the weekly time frame, when you get to these air pockets on a weekly time frame, these are the ones that, you know, you definitely want to possibly say, hey, you know what, I don't mind going bearish on that. That's a pretty sizable move. So we'll see how things go. That just you know, you never ceases to amaze me just sometimes how much the market will be overreactionary in any one direction or the other. Other than that, definitely just continue to pay attention to certain things that are moving, because we're still getting a lot of things across sectors are still moving quite a bit. So just be paying attention to that stuff, because I mean, some of that stuff's going to tell you how well certain things are going to do over the next couple of years. Alpha Hunters, have a great rest of your day. Have a great rest of your weekend. Take care.